I am not a professional financial advisor. Money to the stock market. When it comes to building wealth in the stock market, one of the smartest strategies is to identify industries that are not only growing today, but are set to explode in the future. Robotics is no longer science fiction. It's already transforming the way we live, work, and even receive healthcare. So today we are diving into the top 3 robotic stocks to buy according to analysts that have the potential to make you rich. These are not random stocks picked out of thin air. These are stocks backed with solid fundamentals, great futures, and the confidence of Wall Street analysts who are tracking them closely. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. The first stock on our list is TechnipFMC, ticker symbol FTI on the New York Stock Exchange. TechnipFMC is a leading global player in energy projects, subsea technologies, and surface technologies. While most people think of energy companies as old school and far removed from robotics, TechnipFMC is proving that robotics plays a huge role in the future of subsea exploration and operations. Through its Schilling Robotics division, TechnipFMC is a pioneer in underwater robotics, producing remotely operated vehicles or ROVs that are deployed in deepwater research, the oil and gas sector, renewable energy installations, and even military operations around the world. The company also reported total inbound orders of $2.8 billion, of which $2.6 billion came from its subsea segment, resulting in a healthy book-to-bill ratio of 1.2x. For those not familiar, that means the company is consistently bringing in more orders than it fulfills, which leads to an expanding backlog. And indeed, TechnipFMC's backlog has now swelled to $16.6 billion, with $15.8 billion of that in subsea projects. This level of backlog gives the company long-term revenue visibility. The company also generated $344 million in cash flow from operations, $261 million in free cash flow, and returned $271 million to shareholders, including $250 million through share buybacks. This combination of strong growth, solid cash generation, and shareholder returns makes TechnipFMC a very compelling investment in the robotics space. Currently, TechnipFMC trades at around $36.22, but the average Wall Street price target is $42.30. Some analysts believe it could reach as high as $51, while the lowest target sits at $36, showing that even the most conservative estimates suggest the stock is well supported where it stands today. On average, the upside potential is around 20%, and when you combine that with the company's growing subsea robotics business and global opportunities, TechnipFMC represents an exciting robotics stock with huge growth potential. The second stock on our list is Boston Scientific Corporation, ticker symbol BSX on the New York Stock Exchange. Boston Scientific is one of the world's leading manufacturers of medical devices, and it is also heavily involved in robotics, particularly in the healthcare and medical device space. The company is best known for its cardiovascular and MedSurg innovations, but it has also been investing in robotics to create next-generation devices that improve patient outcomes. Recently, Boston Scientific has been focusing on expanding its FARAPulse pulsed field ablation system, its Watchman FLX Pro left atrial appendage closure device, and even humanoid robotics research, making it one of the most diversified players in medical technology. The numbers from Boston Scientific's latest financial report are nothing short of impressive. The company posted net sales of $5.061 billion, which was a 22.8% increase year over year. That's well above the company's guidance range of 17.5% to 19.5%. On an operational basis, sales grew 21.6%, and on an organic basis, sales rose 17.4%. Earnings per share also exceeded expectations, with GAAP net income at 53 cents per share compared to guidance of 45 cents to 47 cents, and adjusted EPS coming in at 75 cents per share compared to guidance of 71 cents to 73 cents. Boston Scientific saw growth across all segments, with its cardiovascular division growing nearly 27% and its MedSurg division up over 15%. Regionally, the U.S. market grew by more than 30%, while Asia-Pacific grew 18% and EMEA rose almost 7%. Even in emerging markets, the company achieved double-digit growth. In addition to its organic growth, Boston Scientific has been expanding through acquisitions, recently completing the purchase of Intera Oncology, which specializes in hepatic artery infusion systems for cancer treatment. Currently, Boston Scientific's stock trades at around $106.30, but Wall Street analysts have an average price target of $125.55, with a high forecast of $140 and a low of $115. That average target represents a 21% upside from its current level, showing strong analyst conviction that the stock has room to run higher. With its diverse product portfolio, growing robotics investments, strong financial performance, and expansion into new markets, Boston Scientific is a top robotics stock to watch closely. And last on our list is Intuitive Surgical, ticker symbol ISRG on the NASDAQ. Intuitive Surgical is the undisputed global leader in robotic-assisted surgery. Its flagship product, the Da Vinci Surgical System, has revolutionized minimally invasive surgery by giving doctors enhanced precision, control, and visualization. Intuitive has spent decades perfecting its technology, and it continues to dominate the space with new innovations. Most recently, the company launched its next-generation Da Vinci 5 system, which is already seeing rapid adoption worldwide. Intuitive Surgical reported revenue of $2.44 billion for the quarter, representing 21% year-over-year growth and beating consensus estimates by 4%. Earnings per share rose 23% to $2.19, showing the strength of the company's business model. While global placements of Da Vinci systems fell short of analyst expectations by about 4%, the number of procedures performed using the systems rose 17% worldwide, which is ultimately more important since procedures drive recurring revenue through the sale of instruments and accessories. Intuitive placed 395 new Da Vinci systems during the quarter, up from 341 a year earlier, and notably, 180 of those were the new Da Vinci 5 model, up from just 70 a year ago. That's a clear sign that hospitals and medical institutions are eager to upgrade to the latest technology. The company's installed base of Da Vinci systems has now reached 10,488, a 14% increase compared to the prior year, and that installed base generates a reliable and recurring revenue stream. Intuitive also reported GAAP net income of $658 million, or $1.81 per share, and non-GAAP net income of $798 million, or $2.19 per share. Currently, Intuitive Surgical's stock trades at $475.48, but the average Wall Street price target is $603, with a high of $685 and a low of $440. That average target represents more than 25% upside, which is huge for a company of this size. Well, that concludes our list of the top 3 robotic stocks to buy according to analysts. TechnipFMC is leading the way in subsea robotics for the energy industry. Boston Scientific is pushing forward with robotics in medical devices and patient care, and Intuitive Surgical is transforming the world of surgery with its Da Vinci systems. Each of these companies is backed by strong financial performance, massive growth potential, and the confidence of Wall Street analysts. If you're serious about building wealth in the stock market, these are the kinds of stocks you want to keep on your radar.